The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here. And I'm showing you the chart of the dollar. We're going to talk about the dollar in a moment. Let's just do the numbers. So the Dow itself is up 139 at 24,496. This is really a very important phase. You see, when you've come down as this peak D in the Chapman wave methodology, the fourth highest peak, that was the top on the 12th of June in the Dow at 25,402. We were long, we switched to the short, and we've been short, and we're still at this particular point short, and I'm going to explain what's going on. The 200-period moving average, this orange line was hit. It was tested a number of times, and the reason why I have this circle here is to show that there could be a cluster formation, and if there's a break to the downside, in this case a close underneath 23,997, I'm going to make it 23,950 at any point. That's going to suggest strongly that there's further downside action immediately. This rally says that if there is a close above the high that was made right there on the 27th of June, 24,569, I'm going to say really 24,650. If there's a close above 24,650 by Monday or so, I have to consider a couple of factors. One is that the arch formation in the weekly chart, that lowercase h that goes to a lowercase m, has completed its time and possibly its price to the right side, because the technicals have been very poor, yet the prices remain stalwart. Now, this is going to be very important because the most important factor within the context of markets is, are you having a unified or a unison sell-off where all the indexes simultaneously, as we've had only one or two sessions in weeks, where all the indices were just in unison, parallel factor, going to the downside? That means that you've got like a tidal wave. And if it continues that way, it means that you've got a bear market that is going to impact all the key indices. But when you get a rotation, it means that you're using up energy on one side to try to hold up and fail, and you're using weakness on the other side that was perhaps weak, and now suddenly money's coming into that other area, and all of a sudden there's kind of a bias and equilibrium with maybe a little bit of a bias to the downside, maybe a little bias to the upside. But as long as there is a counterforce, it means that you do not have this unified momentum, this turbulence to the downside, a waterfall cascade, or a rocket ship to the upside. So as it stands right now, the parameters are very clear. For the Dow, 24,650, close above that, and it could be even higher prices, and that really impacts the weekly chart positively, at least for a little while. The technicals have to improve, otherwise we're going to do some retesting of the 24,000 level. Okay, I wanted to spend time on that. I could go into a whole bunch of things here in the details that I give my subscribers some opening call with the 120-minute chart, etc. Let's just move on because you'll see how I'm trying to put the package together. Now, the S&P is up 0.92%. It's better than the Dow, and it is decisively in a leg B, still a gray leg B. Why is it gray? Because it's way under the previous high of 2791.47 made in June, and certainly way below the 2872's high, all-time high of January the 26th. So I'm going to put in a gray leg, a peak A, and a gray leg B. I'm making it gray. There we go, gray. All right. So within this context, the numbers to look at is if the at 2761 right now, 2762, if the S&P can climb, and of course this is against a backdrop. I had a couple of calls this morning from friends who are saying, hey, what's going to happen now with all the tariffs and everything? I said, don't read the newspaper, look at the market. It's going to tell us a lot more than what you read in your favorite newspaper. Okay, So what it's saying right now is that the price is ignoring what's going on. The technicals haven't improved all that much, but the price is acting well. The weekly chart is kind of in the mid-range, looking good. The monthly chart, as I've been saying, both for the Dow, the S&P, the Qs, and the IWM, all still look very good. So this is very important right now. Why? Because it would take a complete give back of today's gains, going underneath 27, say 32, by Wednesday, this coming Wednesday or Thursday. Give it a whole bunch of days to do that. If it doesn't, it says, nah, this is just a kind of a feel-good thing saying it's not as bad as you think, and then all of a sudden people think, oh, maybe it is. So meantime, so far, it's acting very well. That's all you need to look at. The QQQ series, the Qs are up 2.27 at 175.18. This has filled in the gap. This gap was really important. Let me just show you right here. There was a gap between the high 174s and the high 173s, and we just took it out. If we close above the low that was made right here, Chapman wave Roman candle, remember we spoke about that, of the 22nd, 174.69, closing above it would be a very big positive, especially if this is now, I should still call it a gray leg C because the MACD hasn't even crossed positive yet. So let's just say real nice, more than a bounce. This, in fact, for the S&P, is holding the 14-period moving average of the weekly chart. MACD's okay. Stochastic's good at 87%, has turned down, but still quite good. As I say, the monthly is very good. And the QQQ, this is very important because it has those NASDAQ key stocks. And this is the NDX 100 trading vehicle, the QQQ Trust Series, acting very well. All right. We did that. Now let's do this. The IWM, which has been the leader of the pack all the way, monthly chart is still really, really good. Weekly chart has just improved. It wasn't looking so good at the close yesterday. Now it's looking a lot better because it took out last week's high in that red candle. So at 168.29, this is very good. Now we've been short from the very top at peaky, and I said, just remember the weekly chart and monthly charts are still very good. This is like an initial attempt at shorting the best of the best. But what's really important is that we did take nice profits all the way down today. We got stopped out of the very last one, still for a pretty decent gain. But we used the technique, Chapman wave methodology, and now we're going to have to see whether or not we want to re-implement a short or not. Plenty of time over the weekend. I'll be discussing it with my subscribers to my opening call. In fact, it's a very important week. I'm going to be sending out a kind of an overview of what I'm really looking at now. I've done the webinar for the second half of the year, but at the same time, I needed to look at certain parameters. This week is giving me the clue to those parameters. I needed that. It's great. So IWM trading right now, very, very strong. It's actually 4 sessions of green candles. Very nice. Now let's go to gold. This is going to be very important. Funny how a couple of people, every once in a while, I get either from the den or emails on a subject matter that nobody's actually discussed for ages or even before. And then all of a sudden I get a whole bunch of people looking at it. And I introduced the idea the other day. I'm going to talk about it. It's the gold-dollar relationship. Gold is down 3.8 at 12.55, and yet the dollar is down. I'll show you some charts when we get back. The dollar's down 36 cents, broken the left side support. I'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Basil takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, so we're back to the dollar, and the dollar's down 34 cents. Made a peak D in the Chapman Wave. This is a peak D that we discussed yesterday. I was saying a peak C1, C2, or a phantom peak C. Either way, it gave a really nice double top, and I drew in these vertical lines to say the amount of power on this last rally to the 95.53 level for the double top was much, much weaker. Now we've pulled back and we've taken out the left side low that I said was really important. This is gone. This is finished, the oval pattern. It was there for a demonstration. Now what we've got is the arch formation. So this arch formation says that within the context of the markets, within the context of the dollar, we're looking at the chance that there is, and I'm going to go to the UUP. This is the vehicle that we've traded. We're still in the position, long position from the dollar at 90.07. This is called the Chapman Wave Unconventional Flat Base Restart. I know it's a long, long title, and it's an explanatory title. In other words, it explains exactly what we're looking at. There's a particular technique that I use as an instant restart that becomes what I call the flat base restart. Then there's another technique that I use that says, if in fact it does everything you talk about with that instant restart, but it keeps coming back to the low that was made after peak D, and that low right here in the UUP was at 24.59. And then it runs up to the 25 round number high, comes all the way back. And what does it go to? It goes to 24.58, 1 penny below. Keep in mind, you have to understand the instant restart. I'm doing this because there are a lot of people that have studied the Chapman Wave methodology and understand what I'm talking about. So I'm just going to explain. I'll do more in my newsletter over the weekend. That says that every rally should keep coming back quite strongly, and eventually you're going to make a D. This particular pattern often gives an E. This one went to a D. And then when it comes down, not only does it come down sharply, it takes out the left side low. And at that point, you could be ready for a really strong rally. And that says to me, gold has got maybe another week or so of rallying, and then we've got to see how it responds. If the dollar, with the weekly chart still very strong, manages to hold support, we'll just check it out. I wanted to mention that because it's part of the techniques that I like to teach for subscribers to my opening call. Now, within the context of the UUP, let's go to the USD JPY. That is the yen, dollar-yen currency pair, trading right now down 14 cents at 110.53. It has made a peak D. No need to put a down arrow yet because we haven't seen it close under the 9-period moving average sharply, and the MACD is still okay. Stochastic is now under 80%, so it's getting real close. And that weekly chart just says, hey, trading range, don't be surprised if it tests the 108.10 level. It's just going to take its time. Maybe because, well, I should say 109.22 first. And if you look at the USD, if you look at the EUR, USD, the euro-dollar currency pair, this is in a strong leg B, and that corresponds to the way we're looking at the dollar in its leg B to the downside. So I like the euro-dollar for now. The weekly chart says, okay, this is just a bounce, but we'll watch it closely because the dollar may break key support. We'll see. I wanted to get that out the way just real quickly. Crude oil is up 82 cents at 73.76. It made a peak C. I believe that there's a good chance that it's going to go a little bit above 95.27, the high of the third for leg D. And then the pullback is going to tell me what exactly is going on in the weekly, which is really holding very strongly, and the 67.47 and 69.50 level are moving average supports. So I think we've covered everything except the one important one that I'm going to go to right now. Look at the triple yield chart. For my subscribers tomorrow, I'll give a whole, we'll have a look at it in a much greater detail. Suffice to say that I'd say that the peak D that was made in the weekly chart at 32.47, didn't even put a date in, huh? The week of the 18th of May, that was a peak that should see time. Not sure yet about price, but it should see at least time. But if it takes out the left side low bar, that's going to be important. Well, the 30-year has taken out the left side low bar from 32.47. It's trading right now at 29.39. Hey, that's a big drop. And the 10-year, the brown, the TNX, is trading at 28.36. And it hasn't taken out the low. The low to watch would be brown, 27.59, and the cyan 5-year, which was the leading on the way up and then had a much sharper decline percentage-wise, is in the kind of lower end of its range, mid to lower end, and trading at 27.31. It will only take out the low of 25.71 if the bonds, if the TLT, let me just quickly go to the TLT, if the TLT, no, that's not the TLT, here's the TLT, trading at 122.58 in leg E, up 23 cents. If that continues running and treats the 121.70s to the 121.50s as key support. I think I've done everything I wanted to do. Now, a couple of things that I needed to look. STX, this is Constellation Brands. Constellation Brands. XX. STZ. STZ. This is STX. STX is what? Oh, Seagate Technology, right. Yeah, this is very important to me because it's saying that the best of the best in certain sectors are starting to roll over. And that has to do with this whole thing that I'm looking at, this panoply of stocks that have either been leaders or just have been consolidating for a little while, haven't really broken key support levels. STZ, Constellation Brands, Spirits Beer, I believe they're in marijuana as well. 236.62 was the high in May, and trading right now 215. 20 is a 10% correction so far, and it still looks pretty weak. This is going to be one to watch because it's been one of the stellar performers in the market for years and years and years. So this is one to watch. Now, questions I had. So, yeah. So the question about gold, 30 weekly. I think this is it. Yes. I believe this is the chart that I wanted. The question between, I talk about this for quite some time. I've spoken about this. I've said gold and the dollar very often move in in counterpoint, but there are times per year that you can go 6 weeks, you can go 4 weeks, you can go 2 weeks and nothing, and then 2 weeks again, where they go parallel. In other words, they're moving in the same direction. So I just wanted to show you a monthly chart of this. Is the blue is the GLD. Unfortunately, it only goes back to 2007. I thought it went back further. And this is the blue one is the UUP, which is the dollar bull. That's how you can trade the dollar, so what we are long. So this is the dollar blue, and red is gold. So you can see there are periods where you go together, periods where you don't. So I wanted to just say that, yes, this could be a period where gold and the dollar are kind of trading together. But what's really important is that the GDX, and that really is key, the GDX has had a fabulous move from under 2180 to over 2272. It's at 20, where it is now. The high today is 2280. Hey, this is a single leg to the upside. Well, it's leg B actually, but it's got this look of a single leg, and it says holding very well. It says that the GDX should have 2254 to 2220 is pretty good support in the next week. I'll be right back. Basil Chapman, Dow's up 163, S&P's at 26. I'll be right back.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back. So let me just quickly say for a couple of questions I had about the Dow in leg B. Yes, this is gray leg B, but this cluster formation has the potential to give a Chapman wave restart, meaning that you've not taken out the left side low of 23,997, and that the MACD histogram, this is what I've been saying all week, the histogram is improving, but the price is really struggling. But the green line, the faster moving average, the 9-period differential, is turning up. And the stochastic has gone from the single digits down to the teens to the 23% level right now. That is a good thing. So I'll be doing a lot of work this weekend, making decisions about whether we keep holding the short position, whether we switch, whether we have maybe two positions. We've done that before, opposite positions, with one being the more intermediate term and the other being short term. I'll make a decision. There's no real rush for that. But let me go back here, because a question about the XLF. Good question, because this is the time to be looking at the XLF. Look, cluster formation hasn't done anything. It's up 21 cents to 26.75 right now. Yields are coming down. It's not really favoring the banks at this time. But look at this weekly chart, declining trend line. How it's how does it know to hit the exact 26.76, then 26.55, and then 26, and then the next one was 26. What was that? Why am I not getting it? Uh-oh. So then 26.46 and then 26.61. That's just perfect on the way down. Perfect trend line. So if there's a close below 26 in the next week and a half in the XLF, that's a real problem. That'll impact the weekly and the monthly charts. Meantime, holding quite nicely. You want to see it in the 27.20s. It's at 26.77 right now. Okay, I got that out the way. Boeing, once again, we always have a question about Boeing. Same thing. Boeing looks like the XLF chart. It's just been in a sideways pattern. I think it's making a U-shaped pattern that should make a double cup formation. In fact, I'll draw it in. This is what I'm thinking. And unless it closes decisively under 307, we might just anticipate there's another cup formation. All right. Next thing we're looking at, question was, so question was, yeah, I did this with the gold and the dollar. I did a number of, gee, funny how so many people. And then the IWM. So the question is, now that tariffs are the real deal, fund managers running to the IWM because of much less impact from tariffs, question mark. Thanks, Kevin. So Kevin, yes, there's no question about it that the small caps are, as we understand it now, are less affected. But there are a couple of things that we have to consider. That the fine print, I speak about this in politics since I've been here, 13 years, I don't know how many years, since 2003, right? So I've always spoken about this, and I've said, when legislation is passed, when anything is passed, don't look at the headlines. Look at the small print. Look at the asterisks, because what happens is, it invariably happens, is that the little fine print in 10 font, 10 size font, pica we used to call it, jumps to 64 in about 3-4 years time, and that becomes the big thing nobody was looking at, but somebody snuck it in because of whatever. I don't want to get into it, but they stuck it in, and all of a sudden it becomes the thing. So that's what I'm thinking here. What we think about tariffs now, we don't know. Now, I don't like the fact that we're becoming more insular, more protectionist. Historically, it's because whenever we've done that, like in the 20s and 30s, it's not really led to good conclusions in the end. But I'm just letting it play out, because we're talking about GDP, gross domestic product. We're looking at a lot of things, imports, exports. It's too complicated. Nobody can really say. And the reason why nobody can say is you don't know what the little fine print is going to tell you and how it's going to impact things. All right, let's get that out of the way. Next question is, yeah, this is a legitimate point. Given that the Chapman wave must wait another day, week, month for tech confirmation, but then the market has already made its decision. Yeah, it's a point I've always made, and it's a point I've always made saying, but you tell me how many techniques there are. You know, I've said this as long as I've discussed the Chapman wave methodology. It's the waveform that never sleeps. So that just let's go to Amazon, AMZN. Let's see where it is right now. It's up 15 at 17.15. So it made that peak E top. Then the MACD turned down, the stochastic turned. Look at the inversion on the unbalanced volume. So I didn't do anything. I wasn't prepared to, but I did discuss on air, and I said, hey, wait a minute. Amazon has just made the 1763.10 high on the 21st, you remember? And I said, look at how many stocks are making round number highs at all-time highs within a day or so of actually turning down. Well, Amazon had a 1760.00 as its all-time high. That's the number. If it takes that out, it could recycle and go quite a bit higher. So yes, I use other techniques as well within the Chapman wave methodology, so that how else could I have got the IWM, the exact, almost to the penny, reversal for the short side, but using the technique. So I agree with you. We do have to wait. I don't have to wait. Sometimes I anticipated. Why? Because I use the 120-minute chart as a clue. So here's another thing. A question about other sectors. So the SMHs right now are up 0.89%. A nice leg A. Is that an A? Yep. A nice leg A to the upside, breaking the 14-period moving average. Weekly chart is improving, but not improving enough. And I still think that the semiconductors have a lot more to say now, Drew. And this I have called a Chapman wave potential stalk leg formation oval body. It might not become that, but I have drawn it in to say, let's watch this one closely. All right, we're still short the semiconductors. And that was almost from the top. Remember, we ran it up long for subscribers, and on the way down short. We're still short. Now, it's a question about the biotechs. So the biotechs, huge move, up 3.20, one of the best performers of the day. It's up 3.58 at 115.56. This is the IVB NASDAQ Biotech ETF. So I've been talking about this with subscribers for a long time. You remember we shorted almost at the top when it made the top in July of 2015 at 133.60. I believe we shorted at 130, and we got about 111 points on the downside. And I've not been very good at it since then. We've been in and out. It's basically more like a break-even trade. But we did go long on Tuesday. I like the fact that it was above the key moving averages. I like the fact that it made the on-balance volume, it made a V-shaped reversal. So we went long at about 110.77, I think it was. It's trading at 115.61 right now. And that's what I was saying. This week for me is probably one of the most important weeks in looking out for confirmation or non-confirmation. And what it's saying is my concept of rotational corrections, or I call it the Granville. That was what he was famous for, Joe Granville, the late Joe Granville. Or having a unified, just a massive down move or up move where just like 95% of stocks are moving in that direction. Now what it's saying is, no, we've used up time very judiciously. The Dow now is held above 24,000, hasn't gone back to the 23,300s. The S&P has held even better. The Qs have held even better. And the IWM has held even better. And you've got leadership now in a sector called the IBB. Very interesting. It really clarifies a lot. Plus, we've got bonds, and we know what's going on with the dollar and gold to a certain extent. I'll be right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
All right, folks, we're back. Dow's up 145, S&P's up 24. Statement was made, hardest thing to learn about the restart. This is a Chapman Wave restart notation. Do not be afraid to do the restart. You can always undo it, and that's exactly right, which is the reason why there was a chance that I was going to go long the Dow. I just didn't know how to do it, and I thought, you know, we've got positions that have done well. We don't have to be jumping onto every single thing that's moving. Sometimes speed is important, and this is now quite a big deal, because if the market holds at this level into the close, or even better, and then gaps up on Monday, it says, whoa, now is this the place to be getting in? Well, you've got to have that kind of courage and conviction. But in the meantime, it's really important to be looking at stocks that, when you look at Microsoft, here's a question GT wanted to know about. Microsoft Corporation, trading at 101.21, up 1.45, MSFT. Look at this spectacular chart. From the moment it broke out back in July of 2000 and maybe it was August. Yeah, August of 2015. It's held the green line, that 9-period moving average. Hasn't even come close to the 9. And therefore it is way above the 14, which is at 87.96 right now. 92.95 is the 9-period moving average support in the monthly chart. It's trading at 101.16. It made a doji peak last month, which said, uh-oh, watch out, Microsoft, weekly chart peak E, monthly chart peak E, daily chart peak E. Whoa! Well, it did. It pulled back to the 97s from 100 and, what did I say it was? 102.69 was the high, all-time high, and it pulls back to 97's 5 points. It's like 7.5%, 8%, and now it's back, rallying, about to test some dashed trend line resistance. So let's just do this. I'm going to go to my here we go. This is the program that I had developed for me. Gives Chapman Wave support and resistance lines. So you've got, oops, oh man, I messed up a chart over there. Didn't mean to do that. Microsoft trading at 101.16. It has support. It had support at 99.57, which it held. The next resistance is at 102.80 and then 103.91 on the daily chart. We don't need the 10-minute. No, we don't need, well, 101.44 is on the 10-minute. 120-minute has 101.24. It's very close. If it breaks above that, then it's going to go to the 102, 103 level. And the weekly chart is still very positive. Look, nice action. Weekly chart has 102.41, 102.72, 104.15. Monthly chart has nothing. There is nothing there. for resistance. So this is going to be important. If Microsoft in the next week from today, has taken out 97.50 as key support, that's 4 points lower, about a little less than 4 points. Very negative short-term, but monthly charts still looking good. But if it breaks out, I mean, we're right here. Microsoft hasn't had a chance to consolidate. Will it take the chance? It hasn't now. It did a little bit of a consolidation. So it's important to be stock specific, to have confidence in your technique, and at the same time not to be overwhelmed by all the bad news, or even if this is interpreted as good news, because it's still really early in the game. Next question I had was, would I look at, where did that go? The transportation index, IYT. Let's look at it over here first. IYT is coming off the 184.50. You see this at support in the daily, and the 120-minute chart is at 185.45 support, but a lot of resistance at 189.04, 189.64, and 190.73. Let's go back to the real thing on my chart, IYT. This is the iShares Transportation Index. Hey, nothing to see here, folks. The 200-period moving average looks like it's more a magnet than a propellant. The weekly chart says, you know, you could rally, but there's a good chance you're going to come back and test the 185s. So do each thing separately. My contention is that the transports are telling us a lot more about, say, the Dow. The relationship there is a little closer, but you have a bifurcated market. Keep your eye on these charts here. We'll do them daily, weekly, monthly. Watch out. Here we go. IYT. Peak D in the daily at 201 round number high, pulls back quite sharply to the 183s. So 17 points, 18 points. And look at the weekly chart, has that H to M pattern, and the monthly chart is still pretty good, holding above the 14-period moving average and the 9-period moving average, but the MACD is starting to turn down. I'd be a little careful right here. And let's just roll through these things. So let's go to the SPY. We won't go to the S&P, we'll go to the SPY. Yeah, very strong leg B, but within the context of the weekly chart, it says, you know, we've seen this before, and unless the SPY can really crack the 276.80 resistance to try to make a leg D in the weekly chart above 279.48, we could start to see a failure by Monday or Tuesday. So this is important. MACD hasn't crossed positive. Yes, stochastic has improved. On balance has improved. It is a good chart right now in the sense that the daily is saying, I'm trying to build momentum. This is a really good candle. Unless I do the same thing I've done before, green, red, green, red, green, red, is going to be a red candle on Monday. So far, this is not bad action. All right. Question I had was GSLC. I haven't looked at GSLC. I don't know if I can do that right now. GSLC. Yeah, this looks like the S&P. So look, this is very much the same chart as the S&P. It hasn't filled the gap, though, that was from the 18th and from the 19th or so. So this is improving, but the weekly chart is still saying a lot more needs to happen to become really positive. So there was another question I wanted to, short-term trading index. Let me have a look at that. Haven't even looked at that today. Short-term trading index is at, it hit 170 and it's trading at 0.80 right now, and also went down to 1.57. No, I don't have any readings whatsoever on that particular situation. Next question is, here's a good question. Could I look at, and this is important because this is a stock, Caterpillar, which tariffs and all, I don't know if it's affected by tariffs, but I think it's affected by the FXI, which is the China 25. See, it looks almost the same. Look at the daily chart. Look at the flat, no rally daily chart. This is the iShares China Large Cap ETF at 42.42, up 47 cents. And now let's go back to Caterpillar. There's a nice relationship. Look, same thing. So this is telling me that there's something going on with the commodities. There's something going on that, at least at this particular point, I'm not really seeing. I'm going to go to the TRCCI. That is, remember, that's the commodity index that I like to look at. Yeah, it looks almost like Caterpillar. Made a peak in the weekly, monthly chart has gone to a peak in this is one of the very unusual times I've ever seen it. A monthly chart goes to peak E in a very short period of time over 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 11 bars. It makes 12 bars. It makes the peak E. But wait a minute, look at the monthly chart. This is just a flat. I've never seen an arch so pathetic and yet going to an E. So I'm a little concerned that commodities, I'd like to see some inflation in commodities. This personally, we got it in crude oil, but nothing else. I'll be right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of The Trader's Edge, heard here at TFNN.com.
Hi, folks. Don't forget, Steve Rhodes, you got Dave White, and should be a really interesting close, which Tom O'Brien will be discussing with you at the end of the day. Yeah, it feels a little weird to have had that holiday on Wednesday. I'm just totally confused. I keep saying to everybody yesterday, have a good weekend. In fact, there was still 2 days to go. Okay, so leg E in the E-mini. This is very important. See, the E-mini, I think, is giving me a lot because it trades pretty much all the time except for the weekend. Look, there's a downtrend Chapman wave inside track resistance level. And that says the MACD hasn't yet turned up, so that means, wow, if the MACD was to cross positive, this would go even higher. Stochastic is really okay. It's not great. It's at 35%. That's really not good action. The weekly chart is saying, don't get excited. There's still an H going to an M pattern. We haven't proven yet by going into the 2800s in the E-mini. And the 120-minute chart says, yep, a spike up, a rocket ship up to the 2760s. Watch it closely because it's a little extended. So I'm saying I would be preparing buys on certain stocks I've been waiting for a long time that have come down, and that you just want to start a little position. As far as shorting is concerned, maybe there are a couple of days to go, but I would not be surprised that we're in a period where you've got to be ready that at any stage there could easily be a 600 to 1,000 point decline in one direction. We've had it sometimes intraday where you've had up to 600 points or 500 points. I got a feeling that we've just got to be ready. There are going to be sudden rug pulls that takes the market down really suddenly. And that might be, don't be in a rush to get in. Say, I've got patience. There's certain stocks I love. They need to digest the gains that they've had, if they've had them. And that's it. And stocks that are starting to act very well, that have had a good digestive phase as we got into the IBB for the same reason, I would not be afraid to go long. I go long and I put in my stop and just say, hey, take me where you want to take me where you want to go. And that's the way I'm looking at it. I'll make the big decisions over the weekend about what I'm really looking at, how we want to construct the portfolio, which we've been doing all the time, how we're going to add, maybe subtract, whatever it is over the weekend. I'll make those decisions. We're ready, fresh on Monday. Stay tuned for Steve. And
no matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.